Oh, we are live. We are live. We are live. We are live. Good morning, good evening, good afternoon, everybody, from wherever you are watching in the world. Good morning, and welcome to yet another LTS with myself, Isaac Izy. I am glad to have you guys here. Can we please just confirm if I am audible, if you guys can hear me? Um, you guys can see me clearly? I believe all is well on my side. Just before we begin, I just want to let you guys know that you are welcome to ask questions in the comment section. In the live chat, please ask any questions you have pertaining to what we'll be discussing today. Whatever question experiences, I love to engage whenever I am talking to people. Without wasting any time, let's get on to the lesson of the day. And before we proceed with today's lessons, I just want to give out a disclaimer that any opinion, any news, research, prices, or analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute as investment advice. If you do seek any investment advice, please make sure that you talk to a regulated entity or regulated key individual by the Financial Regulatory Board in the country that you are in. All right. With that being said, I just want to welcome everybody that's coming in once again. Welcome to yet another session with myself. If it is your first time here, do let me know in the chat, in the live chat, and the comment section. Please let me know where you guys are tuning in from. Let me know which country you're tuning in from, which city, and whether you're a beginner or you are an intermediate trader or you are an advanced trader. Let me know in the comment section. Let's get to it. All right. At the end of the session, I'll be giving you guys 100% deposit bonus, what you call promo code. So after attending the lesson, you will get a promo code to use where you can get 100% deposit bonus. I will share the promo code, like I said, at the end of the session. So make sure that you stay up until the end of today's session. All right. And for those of you that are joining me for the first time, as I said, do let me know in the comment section where you are tuning in from. Let me know if it is your first time. Let me give you a warm welcome. Let me give you a warm welcome. Let me give you a warm, easy welcome, a warm Octa welcome. All right. Let me know in the comment section. The guy that you see in the picture, that is myself. And I am a professional financial market expert. I have a decade of experience. I have trained over 5,000 traders throughout my years in my career, and I've held over 300 Forex seminars throughout the Southern African region. And my passion is to teach and train individuals to be professional traders and to succeed financially. And hopefully by the end of today's session, you will be one of those traders that are on their way or on their journey to being a successful trader. All right. All right, I see Solomon says, good evening, sir. I want to trade, but I don't have an idea, knowledge about trading. How can we help? Okay, great. Just stay tuned. I believe we will be answering some of the questions you have, and we will be sending out a link where you can join the Telegram channel. That's where we do give out free educational content, free trading ideas, and so forth. So make sure that you join our Telegram channel, and then if you do seek any, personalized guidance, I'm sure I can speak to you and I can help you with that. All right. Let's move on without wasting any more time. All right. So today we're going to learn how to enter trades. All right. A lot of traders that I've come across, they know how to analyze, they know all of these things, but they don't know how to enter and when to enter trades, all right, and when to exit. So today we're going to be talking about how to enter trades. It's one of my favorite topics because I believe once you master this and you master the psychology and risk management, you are really just on your way to becoming a successful Forex trader, all right. So we're going to be discussing what are the few parts that you need to know of about entries. We're going to be discussing time frames, giving each time frame a task. Without a proper top-down analysis, you cannot get to a high probability entry. All right. Yes, the telegram, or there is a link there where you can check, which helps you, Mr. Solomon. There is a link where you can check. It helps you on how to start trading. All right. So as I said, we're going to be talking the few important parts of entries. right? Price, what type of entry models you're gonna be taking, and all of that. All right, given each time frame a task. So we're gonna be discussing time frames. I get these questions a lot. Isaac, which time frame is the best? All right. So I just want to let you guys know that without a proper top-down analysis, you cannot get to high probability entries. All right. If you don't do multi-time frame analysis, I did teach the other day on multi-time frame analysis. So make sure that you check out that video. I believe it was here on YouTube and not Telegram. If not on YouTube, then I believe I will come and teach on it, so I can give you guys a proper breakdown of how to use multi-time frame analysis. All right. So without a proper top-down analysis, you cannot get to a high probability entry. All right. Number two is, what are you going to do on each time frame that you are using? What is the aim? What do you draw? What do you measure? And what do you look at these time frames? That's what we're gonna be looking at today. All right. So this is basically just an introduction of today's session, and hopefully we can get to do some analysis. If you don't get any entry right now, actually just was actually looking at a trade right now. I was about to send the what do you call, I was about to send the signal. I'm going to quickly send the signal now on Euro JPY. If you do have a funded account, please actually it has already started melting, but it's not a problem. We will you can take a sell entry on US Euro JPY, right? Euro JPY. So make sure that you do take that entry there. So the how we send the entries is, you can take the trade now at market execution, or you can wait until we get to price 1650. 165.050. 165.050. That is our entry price on Euro JPY. We will be taking that trade together. Hopefully it will get to that price while we're waiting, but you can also just do an early entry right now at the current market price, and then let's wait for it to either drop or continue going up and trigger our sell limit. All right, I see we have Khunze. I'm Khunze from South Africa. I'm new and I want to learn how to trade. Welcome, Khunze. We will be assisting you. We'll be sending out a link in the comment section for you to join the Telegram channel. Khunze, do let me know if you do need personalized guidance and all of that, and then we'll be able to assist you with that. All right, so we're going to be discussing what are you going to do on each time frame that you are using. What is the aim? What do you draw? What do you look out for? And what do you measure on that particular time frame? So what about what about gold? We had already taken a buy on gold earlier today. Unfortunately, we already taken a buy on gold, so we will be looking at we will be looking at other opportunities there as well. All right, so number three, we're going to be discussing refining your entry criteria. All right, what are the rules that you have for your entries? All right, what is the series of events that you need to see before you engage in a trade? Some of you don't have entry rules. You just enter the market. You need to have rules. You need to see certain things happening before you can engage in a trade. All right, what is the required stop loss and take profit? Some of us don't have these rules as yet set before we even take entry, so we're gonna be discussing that. A checklist of steps that you have to take before you take every trade. You need to have a checklist before you take a trade. You need to make sure that all your checklist have been ticked before you take that particular trade. Are you guys with me? All right, please do engage with me as usual. If it is your first time here, ask questions, give comments. All right, and I always take people that give out comments. I always take people that engage, and I always put them in our mentorship group, or I put you in our premium groups. All right, we have Clive all the way from Heidelberg now in Pretoria. All right, welcome Clive, welcome. So let us engage, let's talk, ask me questions, do comment. All right, so like I said, I'm gonna be teaching you guys how to refine your entry criteria, and then we're gonna be refining your trade management. After you enter the trade, what do you do? When do you break even? When do you take partials? When do you put your stop loss in profit? We're going to be discussing that. A lot of people know that they have to do this, but they don't know how. All right, they don't know how to do this. They just know that they have to break even. They have to take partials. They don't know when to put the stop loss in profit. So we're gonna be discussing that. All right, what are you going to do when your trade is running in profit? All right, what are the things to do? Most people, they panic. They close their trades too early. All right, or they close their trades too late. The market goes into profit and it comes back into losses, and they don't know what to do. Things to look out for that will help you to protect your profit. We're gonna be talking about that today. And lastly, we're going to be learning how to let go of outcomes and think in probabilities. So I want to shift your mindset from a person of always expecting outcomes into the market, from a person that understands that the market is about probabilities. So how do you think and deal with probabilities and let go of outcomes and let go of hope? All right. Even if you have the best entry strategy, with a flawed mindset, you will fail. A lot of you that are here, you know that I'm a big advocate of psychology in trading. If you have the best strategy, if your mindset is not good, you are doomed to fail. I can guarantee you that you will fail. So we're going to be discussing that today. All right, so I can move you from being a trader that is outcome biased and move you to a trader that understand that the market is all about probabilities and not certainties. Are you guys with me? Do you have any questions regarding entries? Maybe it's something that I can answer right now. All right, regarding time frames, any questions that you have regarding entries, exit, stop losses, where to put your stop, any questions that you have, make sure that you ask me. All right, and then we will get to it. All right, so let's start with trading time frames. Let's talk about time frames. All right, this is very important. All right, and I want people to understand that price is always the same. All right, I often hear misinformed traders saying no, higher time frames are better than lower time frames are better. People take their preferences and they always want to project it on other people. I would just want you to understand that price remains the same, whether it be on a higher time frame, whether it be on a lower time frame. Price is always the same. Time frames are just different representations of it. All right, think of it this way. How can I put it? When you have a car, you have a car. That is a car. All right, or maybe let's have a look at this mouse. This is a mouse. Right, this is a mouse. It doesn't change. It's a mouse. All right, now different time frames will be maybe the time frame represent this right click, and the other time frame represent the left click. The other time frame represent, oh no, the other time frame represent the wheel. The other time frame represent the lens. The other time frame will represent the batteries, and so forth. All right, so that is what time frames are for. They just show you different representation of price, but price remains the same. All right, from the yearly time frame to the 1 second time frame, the price is all the same. What is different is the amount of information you see and the depth of detail. All right, the higher time frames, the bigger picture. The smaller time frames, the more information and the depth in detail. All right, does that make sense? But always remember this, the price will always remain the same. Many traders fixate their minds on different time frames, thinking they are all different. No, that is a wrong mentality to have. All price is the same. Different time frames just show different representation of the same thing. All right, I want you guys to understand that what do you call, different time frames in the market are just representing the same thing differently. They're just saying the same thing. The smaller time frames will have more details on them. It means more information, and the higher time frames will just give you a bigger picture, but they all saying the same thing with just different representation. Do you guys understand that? All right, you can read the 4-hour chart from the 15-minute chart and the 15-minute chart from the 1-minute chart, but it takes experience. So as you grow as a trader, you'll start noticing that you are able to know what the 4-hour time frame is currently doing just by looking at the 15 minutes or the 30 minutes or even the 1 hour. And you can also know what the 15 minutes or the 30 minutes is doing from watching the 1 minute time frame. So as you grow in experience, you start paying attention to the market, you start spending time on the charts, you'll start seeing a whole lot of things being revealed to you. All right. And number two is the higher time frame is where the money is. All right. The higher time frame is where the money is. Why is that? This is where the big financial institutions operate and where we follow their footsteps. All right. The higher time frames is where the big money is, because this is where the big whales, all right, the big financial institutions, they operate on the higher time frames. All right. And remember, our job as retail traders is to follow the footsteps of the big financial institutions. Are you guys with me? If we can see where the big money is headed, then our task is just to follow it. Simply follow the trend. All right. I'm sure you guys have heard of the expression, never trade against the trend, but the trend is your friend. Follow the trend. If we see what they are doing on the bigger time frames, even when we scale down to the smaller time frames, we know where the money is headed, and we're just looking to refine our entries into those and into the direction that the big financial institutions are heading in. All right. Higher time frames will always prevail. All right. So we have the 1 quarter, the 1 week, the daily time frame, the 4-hour time frame, the 15-minute time frame. So it shows you that which time frame will always prevail over the other. All right. So it means it always shows you the bigger picture over the other. And we use literally smaller time frames to refine our entries, taking information from the bigger time frames, knowing which direction we're going. Are you guys with me on that one? All right. And there is less noise on the higher time frame, which makes it easier to identify main direction. All right. You'll notice that most of the time, if you go on a 5-minute time frame, I'm just quickly maybe just going to open a chart right now. All right. This is the trade that I was telling you about that we put. Oh no, what did I do now? Okay. This will be my TP1. No. All right. So our sell limit is over there. I've set my sell limit already. All right. So we're waiting to take that trade. So what I want you guys to look at is let's now go look on all right, on a higher time frame. All right. We're looking at a daily time frame. All right. Sorry about that. Delete all selected. All right, great. So we're looking at let's go on a weekly time frame. Start on a monthly time frame. On a monthly time frame, we have a clear representation of an uptrend. All right, cool. You guys see that? See how simple it is. Literally, the higher time frame, the monthly time frame, is telling us that we are currently in a uptrend, and most importantly, we've reached the high, or we're almost at the high, the highest high that the market has reached since maybe 15 years ago. All right, so already the higher time frame tells us that we are at a very crucial resistance area. We are almost at a very crucial resistance area, because the highest Euro JPY has been was in 2008 on the 1st of August. Or not necessarily on the 1st of August, because that's when that candlestick, it started falling from then. When in August 2008, that's when Euro JPY started falling. So we can already see that by the monthly time frame, we already know that there is a huge possibility of the market dropping again. All right, because that high, the market doesn't reach that high in such a long time. So it is a possibility that this is a very strong resistance area where we could be possibly looking at a long-term sell. All right, and then let's go on a weekly. You go on a weekly, you see the same thing. We still see the characteristics of an uptrend. We see that the market has broken the previous high right now. All right, market has broken the previous high right now. All right, and so we may be expecting the market to push up just a little bit. That's why we sent out that sell limit to push out just a little bit, and then we can have a bit of a pullback to the downside, all right, before the market eventually reaches that high that we've seen, or it could possibly turn over here, all right, because as you can see now on the weekly, what we want to see, we see that price hasn't been able to close above this high over here. You see, the market got here, it reversed, came back, got to this price again, it reversed again, came back, got to this price, it broke to the upside, but came back down again and closed below. Same thing last week, it went back, it went up again, and then given us a reversal over there, reversal candlestick, of which we'll touch in another session, and then it came back and it's still closing below. Let me just quickly put a proper what do you call horizontal line over there. As you can see, the market keeps rejecting, and now we see the market push to the upside. We don't know what the market is going to do this week. It probably, like I said, we speculating that the market will probably come down back again, all right, but the market could come back and close below here. Then we know we may have a possibility of a double top, then go into the downside. So again, that's just looking at the weekly time frame. Then we go on a daily time frame, all right. We still see pretty much the same thing, all right. We see the market breaking this high over here, all right, breaking this zone over here, but coming back down again and still playing in within this zone, all right. So the market hasn't given us a clear indication of whether the market is going to go down or up, but however, we see that we are still in a uptrend. And right, if I go and draw my trend line over there, all right, you see, so there was a bit of a fake out over there, and now the market broke down, and then we see the market just touch that trend line over there, possibly coming back down again. All right, we don't know what's going to happen. So right now, what we want to see price action happening at this high over here. We are speculating that the market will reject this price over there and go back down again, obviously to fill any imbalances over here. For instance, to rebalance price action, we expecting that the market should reach that high over there and come and fill out this zone over here. All right, see the same zone that I got from there. So we're expecting the market to come up at least up until that area over there, or it could turn from where it is now, come back and rebalance price action over here, and then continue going up. Or we could easily start having a change of direction. So that means the market could do this, possibly break this low over there, all right, go back up again, all right, to take out any liquidity, and then we could possibly be going down. All right, do you guys see that? You guys see that? And then now you go on a 4-hour time frame. 4-hour time frame. What is the 4-hour time frame telling you? The 4-hour time frame, we see a bit of a change of character. We see a bit of a change of direction. We see now the characteristics of a what? Of a uptrend. I mean, of a downtrend. All right. And what do we see? We see the market going up to grab liquidity over this area. All right. To grab liquidity around this area. All right. So, and also here we now start seeing a reversal pattern. We start seeing a reversal pattern, which means that there is a possibility that the market will continue going down. But now do you see the difference? From the higher time frame, I've taken it all the way down to 4-hour. And then I can quickly go on a 5-minute time frame. The 5-minute time frame really doesn't tell me what is going on. The 5 minutes time frame doesn't. If I make my decision based off this, I won't be able to make informed decisions. All right. So now when I come on a smaller time frame, like 5 minutes or 15 minutes, basically what I'm doing for is I start looking for entries. Entries for what? What I've already determined on the higher time frame, what I'll be looking at. All right. So you guys see that? All right. Let's quickly continue with our presentation, then we'll come back to the chart. I just wanted to show you guys the difference between the higher time frame, that you see a clearer picture on the higher time frame, but then you can refine all the way to the smaller time frame so you can get your better entries there. The lower time frames are only for entries and refinements. Do you guys see that? Exactly what I was explaining. The lower time frames are only for entries and refinement. I see people saying, can you do monthly analysis on gold? Yes, we're gonna get to that when we get to the charts. We'll analyze on gold and the dollar index. All right. The lower time frames are only for entries and refinement. Only once we know what price is going to do on the higher time frame, then we drop to the lower time frame to search for entry zones and criteria. Do you guys now see that? Exactly what I was saying. Only when we know what is happening on the higher time frame, we know which direction to take on the higher time frame, then we go on a smaller time frame to search for entry zones and criteria. All right, you do not drop to lower time frame without having your higher time frame zone structure and ranges. All right, you do not drop to the lower time frame until you've put in your key levels, knowing exactly where you want to be selling from or where you want to be buying from. We just go on a smaller time frame, all right, to now start looking for refined entries. All right, we start looking for price action, we start looking for double tops, we start looking for price cycle to have, we start looking for rejection candles on smaller time frames, but also just this is just us confirming what was happening on the higher time frames. Are you guys with me? Are you guys with me on that one? Let's explore time frames. All right, so which time frames to use? All right, which time frames to use? Now, the 1 month, the 1 week, and the daily time frame. These are major time frames. All right, this is higher time frames for big financial institution direction. So as you can see, TF stands for higher time frame. BFI stands for big financial institutions. I hope you guys are with me on that. Those time frames are for the big guys. They determine the big trend. These time frames determine the major trend. All right. Always be aware where price is currently trading in terms of those time frames. Are there any important zones in that time frame? All right, as you guys, as I was showing you on the monthly time frame, where we see Euro JPY was at the high, it's almost at the highest it's been in over, I don't know, I think about 14 years or so, if I'm not mistaken, 16 years or so. Right, that is a major zone, but I can only see it on a higher time frame. So already that was already sparking something in my mind that there is a possibility of a huge turn around in the market dropping. You guys see that? So always be aware price is currently trading in those time frames, on the weekly, on the monthly, and on the daily. All right, are there any important zones in those time frames? All right, so that could be your order blocks, that could be your imbalances, that could be your fair value gaps, whatever you want to call them. That could be your key levels. All right, it can take too much time to wait for those trends or zones to develop. So we trade the lower time frames than that, all right? But always being aware. So even if you are, let's say, as we're seeing now, that on Euro JPY, we are still on, we are in an uptrend, obviously, on the bigger time frame, but there is a possibility of a short coming into the market, a major short coming into the market. Even if you still want to trade buying positions on the Euro JPY, like right now, I did say I believe it's going to go up a bit before it drops again. If you want to trade that, you are trading aware, so you're not going to swing that trade all the way to I don't know where, because you are aware that there is a possibility of a huge reversal, because we are at a key zone right now. All right, so even when we trade lower time frames, it's important that we are always aware what is happening in the higher time frames. Are you guys with me on that? All right, and then we go down from the daily chart to the 4-hour chart, the main time frame for direction, major structure. All right, I prefer the 4-hour time frame because this one gives you the where you can identify market structure, the major structure. This again, we'll go back to the chart that we were looking at right now. If you start looking at structure over here, this one gives you a structure. Remember, from the daily, weekly, and whatnot, I couldn't see this change of character over there. But once I went on the 4-hour time frame, I start seeing the change of character. Oh, I start seeing the characteristics of a downtrend. We have higher, what do you call? Higher lows and lower lows, higher lows and lower lows. All right, we start seeing that change over there. So again, we see that there's a possibility that the market will come and it broke this trend line now, tested this trend line, as we can see. All right, let me just refine that trend line over there. All right, see the market tested that trend line over there, there is a possibility that the market will still come and grab liquidity over there, rebalance price action before going down, and also possibly creating an M formation. So you see on the 4-hour time frame, I get a good structure. This gives me a good structure, a good structure. You see, guys, see that? Are you guys with me on that? So the 4-hour time frame, I prefer it over. So here we could possibly have something like that over there. As you guys understand that history repeats itself, right? We had the same zone. So you see we had characteristics of a downtrend there. The market shot up again, didn't even go up there, and then started going down again. So we could possibly have the same thing again before the market shoots up again. As you can see also the characteristics of what you call Euro JPY. It goes up, goes down, goes up, goes down for a while, then continues going up. We see that mainly, you see the behavior of a certain currency pair mainly on the 4-hour time frame. All right, are you guys with me on that one? Apologies on that. I don't know why it's because I'm using one screen. All right, not a problem. So on the 4-hour, the main trend for direction, this is where we now choose our direction. All right, the major structure. All right, identifying the trend, the range. All right, and major structural levels. All right, weak and strong highs and lows. All right, this is where we start now seeing the weak lows and the strong lows. We determine them here. We identify our trend here. We identify our ranges here. All right, the best higher time frame for day traders. All right, swing traders can also use the daily, but day traders mainly use the 4-hour time frame. So if you are a day trader, the best time frame that you want to use is the 4-hour time frame. All right, are you guys with me? I don't see you guys engaging. Are you guys understanding what I'm saying? Do you have any questions so far? All right, and then we move down to between the 15 minutes and the 1-hour time frame. So that means the 15 minutes, the 30 minutes, and the 1-hour time frame. All right, these are for refinement. They are for refinement. All right, for intraday time frame, minor structure. This is where now, yes, is it possible to take a trade on a 4-hour time frame? Yes, it is possible. However, you will have to wait for a long time before you can take a trade on a higher time, because you need confirmations. All right, whereas in one 4-hour candlestick, we can easily get confirmation from the 15 minutes time frame in 1-hour candlestick. Like for instance, I'm just gonna show you something over here. Let's quickly go on a 4-hour time frame so you understand what I mean. All right, so for instance, let's see this I just want us to look at a rejection. Let's look at this these two candlesticks over there. All right, we quickly just go on a 15 minutes time frame and see what they gave us over there. All right, so on a 15-minute time frame, what do we see? We see the market going up, coming down, playing around this area, rejecting this level over here. All right, market keeps rejecting this level. What else do we see? We see that, oh no, we see that engulfing candle over there. What am I doing? Oh no, we see this engulfing candle pattern over there. All right, and also what do we see? We see the market get into this price over here, break into the downside just a bit. All right, we see the market doing so. You see that now we are about to have a break of structure, the market coming to the downside again, just showing us what possibly could be happening on the 4-hour time frame. So already the 15-minute time frame is telling us a lot, whereas on the 4-hour time frame, it's literally just two candlesticks and they're not telling us much. But on the smaller time frame, we are able to see, oh, okay, I see a grab of liquidity there a bit, because we see we have a range and then the market now coming down. Are we going to break this structure over there and go to the downside? We don't know. Are we going to continue going up? We'll have to see that on a smaller time frame before we can make a decision. Are you guys with me on that one? All right. So yes, 15 minute to 60 minutes is for refinement and intraday time frame. Minor structure, depending on the phase and form of the on the 4 hour time frame. The minor time frame will serve as in between intraday time frame, where we can capitalize on both continuations and pullbacks. All right, this time frame help us identify minor structure. All right, so now once we understand what is going on the higher time frames, we can come between 15 minutes. I personally prefer 15 minutes and 30 minutes. All right, so then I can take on a continuation. I can also take on what you call pullbacks. All right, based off my understanding and my awareness of what is going on the 4 hour time frame. Are you guys with me on that? And then we go on the 1 minute to 15 minute. These are entry time frames, so you always look for your entries between the 1 minute and the 15-minute time frame if you want to get sniper entries. All right, and then we'll get to that. I'm going to show you guys. So there's going to be 2 entry models that I'm going to be showing you guys today. All right, so after determining the 15-minute position, entry zones and price taps into them, then you drop even lower if you wish to find an entry. All right, so once we start now looking at our minor structure, we place our zones on the 15 minutes or 30 minutes or the 1 hour, whatever time frame that you choose, whatever that works for you. And then we now even go lower to find an entry on smaller time frames, like you can do your 1 minute or the 5 minutes. All right, I personally prefer the 30 minutes and the 15 minutes. As I said, on the entry time frame, you have to be as detailed as possible regarding your rules. All right, once you go smaller time frame, like 5 minutes, 1 minute, you need to be very detailed about what you want to see happening. All right, do you want to see a liquidity grab? Do you want to see, depending on your style of trading, do you want to see a retest on a key level? Do you want to see a break or a fake out, whatever? Do you want to see the 4 cycles of price? Do you want to see accumulation? Do you want to see whatever that you want to see? Do you want to see an order block? Do you want to see you have to be very detailed. Are you guys with me? And then I'll share with you guys my details on that. All right, top-down analysis process. All right, so we go on the weekly and the daily time frame. Where are we on these time frames? All right, is it pushing or are we in a pullback? Is it a premium or discount right now? What makes sense to trade? Are you guys with me? Are we pushing or are we in a pullback? Is the market pushing up in an impulse move on a weekly or on a daily, or are we in a pullback? If we are pushing, so literally what we want to be looking at, if the market is pushing in an impulse, we want to be looking for a pullback where the market is going to create a high or a low and start pulling back. That's what we want to start looking for, and possibly, take those trades, because we don't want to wait 4 weeks for the market to pull back and not take any trade. So if there is, like right now what is happening on the Euro JPY, there is a possibility of a pullback. That's why we are speculating that sell, because we have been pushing, so we are expecting a pullback to the downside. All right, what makes sense to trade? What makes sense? Is it the impulse or is it the what you call the pullback? All right, are there some important levels on the left to be aware of? All right, remember, we're always analyzing in history on the left of the chart. Are there any zones? Are there any key levels to be aware of on the 1 hour and on the weekly time frame, or even the monthly? All right, what is the trend and structure on the 4 hour? We've already discussed it. Once you go on the 4 hour, what is the trend and what is the structure? What makes sense to be traded? Again, with the example that we just looked at on Euro JPY, right? There is structure, is that we've seen a change of character, we've seen a change of direction, all right, from Euro JPY. All right, what makes sense for us to trade now? It's not the impulse move to the upside. It's either waiting for a bit of a pullback or rather a reversal from the top going down. That makes sense, all right? So we identify the trend. Is it currently in a push towards a weak low or high, or is it in a pullback towards what you call? You get what I'm saying? So define your range within the Fibonacci or whatever that you use to define your range. You can use that. All right. Mark with highlighter the major higher highs and higher lows. All right. And mark, so you now start marking your key levels. You start marking your key levels or highlighting them on a 4 hour time frame. All right. And then we go on the 15-minute time frame. All right, zones, and you start looking at key levels on the 15 minutes time frame and the zone. So depending on the 4 hour, wait for the trend there to align with the 4 hour for continuations. All right. If you are taking continuations and not pullbacks. So what you want to see is you want to see the 15-minute time frame aligning with the 4 hour, telling you that we are about to continue or reverse to the direction of the 4 hour. All right. For retracement, if you are trading retracement, wait for the trend to change. All right. After a creation of a higher high and a higher low, or a higher low. All right. Are you guys with me? Trade this until the 50% of the 4 hour, until structure aligns again. All right. So you see now it gives us once we start looking on the higher time frame, it gives us a bit of both. Whether we want to trade, we want to wait for the continuation after a pullback and continue with the trend, or we want to take that retracement trade, because then it will be good pips over this. So what we're going to do is, if we are trading the continuation, we wait for 15 minutes to align with 4 hour. All right, we wait for it to align. So it means they must both say the same. If we are buying, they must both say we are buying. And then if you are taking retracement, wait for the trend to change. All right. So we want to see a character. If we are in an uptrend, we want to start seeing a characteristics of a downtrend on a 15-minute time frame. So that means we want to see market creating higher lows and lower lows, and taking our liquidity and going down back again. All right, so that's what we want to see. All right, and then you draw your zones on the 15-minute time frame. All right, and then the 1 minute and the 5 minute is the entry time frame. All right, you drop here from the 15 minutes once the 15-minute zones have been tapped. So once you start seeing the market tapping into your 15-minute zone, you drop to the 1 minute all the way, or you drop to the 5 minutes or the 1 minute, and you start looking for your entry rules. Remember those rules that you've already put for yourself. You start looking for them on the 1 minute and the 5 minute. Is it a rejection? Is it order blocks? Whatever that you look for to use for confirmation, and I'll share with you guys what I use for myself. All right, are you guys with me? Do you have any questions so far before I proceed? Do we have any questions? I'll wait. All right. All right, guys. No questions. Let's move on. All right. So we're going to talk two entry models, the set and forget models, and also the sniper entry, the precision entry model. All right. So when you do a set and forget, this is now the interesting part. When you do a set and forget entry model, two things to consider. What is your higher time frame? That dictates the major market direction. All right. Which time frame are you using, and what is it saying? What is your middle time frame? That illustrates your minor structure and the ranges within the major structure. All right, so for instance, if you're looking at a daily, maybe minor time frame or the middle time frame you want to be looking at is the 1 hour. All right, are you guys with me? These are the two things to consider if you're doing more long-term trading. This is for swing traders. All right, you don't want to go too low if you are swing trading, so you want to be taking trades on a higher time frame. I'd say the lowest you can go is literally the 30 minutes. All right, the 30 minutes, that's just my preference, but you can go as low as the 15 minutes, but I just prefer the 1 hour and the 30 minutes if I'm taking long-term trades. All right, so if you guys understanding, can I see some fire emojis in the comment section? Can I see some dollar emojis? So that means you guys are understanding what I'm saying, and from today going forward, we're going to be doing top-down analysis and using multi-time frames to get our entries. All right. For set and forget, the SAF stands for set and forget entry model. It is always preferred to stick to the higher time frame, all right, the pro trend, and not go against it. All right, so if you want to set and forget, it's important that you don't trade the pullbacks. You want to trade the impulse move in the direction of the trend. All right, and you stick to the higher time frames. All right, the higher time frame trends. All right, take those entries at extreme points on the higher time frame. All right, you want to take these entries at key levels, and if it's your first time here, I'll explain what key levels is as we go on, but most importantly, you want to take at major key levels. That's where you want to take this entries. All right, keep a safe stop loss and do not micromanage. So once you set this trade, you don't micromanage it. Set your stop loss, set your TP, and let it run. Don't be checking it over time because it's going to confuse you. These are for the people that have patience and they don't really mind waiting for long for the market to get to their target. All right, so for me, like I said, it's the 4-hour time frame, and the middle time frame is the 30 minutes time frame that I prefer using. All right, and the sniper entry model, the precision entry, is obviously the one that you guys prefer. Most traders, I know, they prefer this. All right, can I see some fire emojis if you're ready to master the sniper entries? Fire emojis in the comment section. Let's go, let's go, let's go. I see you have Angelo Visser in the group, in the comment section, commenting when you're using the sniper entry model. All right, 3 things to consider. What is your higher time frame that detects the major market direction? Number 2, what is your middle time frame that illustrates your minor structure and ranges within the major structure? All right, and number 3, what is your entry time frame that gives you the entry criteria and the signal that you're looking for? All right, those are the 3 things to consider. For precision entries, it is essential to have mastery over your higher and middle time frames. You only go to the lower time frames after those 2 are ready. So you get your confirmation for your trade on the higher and the middle time frame. You only go to the lower time frame once those 2 are aligned. All right, so if you're using the 4-hour and the 30 minutes, or the 4-hour and the 1 hour, those 2 needs to align, and then you can only go on the smaller time frame, all right, to confirm once these 2 have aligned. All right, as we discussed earlier. All right, Angelo, we thank you for that. We appreciate you. You just won yourself a 3 months package of premium signals. 3 months package of premium signals. So make sure that you text us in the Telegram channel, and then we will give you access to the premium group. Thank you for your participation. All right, let's move on. And number 2, you need to have precise and strict rules so you know exactly what you're looking for on the lower time frame. All right, how do I know where to put my stop loss and take profits? We're going to get to that. We use key levels for that. We used key levels for that, and then I'm going to show you guys shortly as we go to the charts. All right, we use key levels. All right, have a precise and strict rule so that you know exactly what you're looking for on the lower time frame. All right, are you looking for an order block? Are you looking for a change of character? What are you looking for? You need to know exactly. So that means if anything happens outside of these rules, you don't take that trade. That's all. That's your trading playbook. That's your trading strategy. All right, have patience to wait for the strict rules to play out. All right, don't jump in too quick into the trade. All right, and have guts to take 1 or 2 losses before you hit the big win. All right, this is important, especially if you trade in the smaller time frame, because there's a lot of activity that goes on there. So you must be ready and have the guts to at least lose 1 or 2 trades before you can get that impulse move to the direction of your trade. All right, this is possible. It's not all the time, but it is possible. So always make room for that, and that's why we use tight stop losses on this snapper entry models. All right, have time to stay on the charts and monitor it on a lower time frame, because you want to see the character of the market, what is happening, what is the structure, even on the lower time frames. So whenever you trade in this type of entry model, you need to have time to stick to the charts. All right, for precision entries, you follow the same step as the set and forget entry, but once the key level zone is tapped, you drop to the lower time frame. There you wait for a series of events to occur before you take your trade. All right, these are the 2 models that we have: the set and forget model and also the sniper entry model. All right. Okay, no, 100%, 100%. Do you guys understand? So we understand the multi-time frame analysis. We understand how to use these time frames. So to our advantage, all right, understanding the higher time frame trends, and then looking for entries at the smaller time frames. We're going to look at gold right now, and then so these are the sniper entry rules. Like I said, the set and forget entry criteria is fulfilled first of the 4-hour the 4 hour trend and the 15-minute zone and range of the 30 minutes, all right? And then you drop to a lower time frame for me, it's the 5 minutes. Then you wait for liquidity point to be taken out, all right? Liquidation for early buyers or sellers. So this is where our key levels are, all right? You wait for a trend to change. 1 minute aligns with the 15 minutes or 5 minutes aligns with the 30. Sorry about that. Wait for the trend to change. 1 minute aligns with 15 minutes and 5 minutes aligns with the 30 minutes. All right. Okay, I just put my phone on D&D. I don't know why this calls keep coming back. I do apologize on that, guys. So enter from the key level zone that caused the 1 minute or the 5 minute trend to change. These are the rules if you trade in the sniper entry. All right. Any questions so far before we go to the charts? Any questions before we go into analyze gold and see if we have any entries on gold? Any questions? Any questions before we proceed? All right, I don't see any questions, so I believe we are good so far. All right, great. All right, let's move on to our charts. Explain the entry criteria again. Is this for the sniper entry or for the set and forget? Which one do you want me to explain? Oh, key levels. We're going to get to them now when we get to the charts. I'll show you now what key levels. This is what we call RB numbers or psychological levels. All right. It's a major part of my strategy. This is where I take my entries from. All right. So please, all right. Can you briefly explain order blocks if you can? I don't really use order blocks for my trading strategy. However, I think I can do a session if you guys want. I can do a session on just how to explain them. I'm not saying they don't work. I'm just saying I don't really use them as part of my strategy, as part of my checklist. All right. I do understand them, how they work literally, but then I don't necessarily use them per se. All right. My main thing, the one that that replace the order block. I don't want to say replace, but it's key levels. I use key levels. All right. So 3 things to consider. It says for sniper entries, please. Okay. There are 3 things that you must consider whenever you take in the sniper entry model. So that means you look at your higher time frame. That dictates the major direction of the trend. You understand that the major trend is this far based on the higher time frame. So that means you want to look at your weekly, you want to look at your daily 4-hour time frame. Then you go to your middle time frame. That illustrates your minor structure. So we are looking at the 30 minutes or the 15 minutes time frame. This illustrates your minor structure and ranges within the major structure. All right. Antito, can I please get juice? Just have glass, please. All right. And then number 3 is what is your lower entry time frame? That gives you the entry criteria and the signals. All right. So these are the 3 things you must consider if you want to take the sniper entry model. And number 2, it is essential to have mastery over your higher time frame and the middle time frame. You only go lower time frame after these 2 are ready. So that means your higher time frame and your middle time frame, they have to align. All right, before you go on the lower time frame and start looking for entries. All right. I have a misunderstanding when I see the trend and within the trend, like the 4 hours on uptrend, but the 50 minutes and the 30 minutes is on the downtrend. Which one should I consider recent on current? All right, we always consider the higher time frame. That is the major trend. All right. So again, like I said, depending on what you are trading, if you are trading the impulse move, or that means the direction of the trend. Thank you so much. If you're trading the direction of the trend, that means you have to wait for the 15 minutes and the 30 minutes to start aligning with the 4 hour. It must also start showing characteristics of an uptrend. All right. And then if you are trading the reversal or the pullbacks, then you can now start trading. You see, okay, on a 4 hour, we have reached a high. So that means there's a possible pullback. So I start looking at 15 minutes, 30 minutes, and I start seeing characteristics of a downtrend. I start refining and looking for my entry for sell position, short-term selling positions on that, on those time frames. All right. Are you guys with me? So like I said, the most important thing is for your higher time frame and your middle time frame to align depending on the entry that you want to take. Do you want to take the continuation entry or the pullback entry? Are you guys with me? All right. And then you just have to have the patience to wait out for your rules to play out before you take a trade. And then that's pretty much it. All right. Let's quickly, because we are running out of time, let's quickly look at gold, and hopefully we will have entry there. All right, view market watch. Oh, there's gold. All right, just quickly going to remove everything here that I've set, and then we're just going to look at. All right, so we're going to start on a monthly chart on gold. Just gonna zoom out a bit. I want to see something. All right, so as you can see, the price that I have here on my left hand side is up until 2010, 1st of January 2010. So I have nothing to play around with on my left hand side. As you can see, gold has reached its highest high since which is 23,000. All right, or 2300, sorry, 2300, which is a key level. All right, remember, key levels are always says double zeros, your tens, your 50s, psychological levels. All right, so we see that prices reached 2300, sorry, on a month. So I have nothing to play around with on the higher time frame. All right, so I have nothing to compare with it. So the previous high that we had there on a monthly time frame is 2150 again, which is a key level. All right, you see it's a 50. So our key levels are tens, 50s, hundreds, thousands. All right, single zeros, double zeros, and triple zeros. Those are our key levels. As we can see here, on gold, literally on a monthly time frame, we had nothing to compare with on the left. So it is very risky to trade when when price has reached its highest high, because you don't know if it's going to where it's going to reverse, because there is no previous zone. All right, there is no previous zone. All right. And you also don't know if it's going to reverse and go down, or it will continue going up. So now we know that we are in an uptrend. All right, we agree that we all understand that we are in an uptrend, so that means gold is buying. So now let's go on a weekly. On a weekly also, we still don't have anything to play around with in the left, because since the market broke this price, that we don't have anything to compare with on the left. So we have really no zones, no supply, demand, no order block, whatever that you use, we have nothing to compare with on the left. All right, so the best thing we can do here is to wait for a pullback and then go back up again. All right, with the market. All right, or until we start seeing a major reversal. All right, I see if you want to trade candlestick pattern like Morningstar and engulfing bar, can take your trade immediately after citing the patterns or wait for 2 or more. I'd say if you are using price action patterns, candlestick patterns, immediately after that candlestick plays out, as long as it's at your key level, then you can take that entry. All right, you can take that entry immediately. All right, and obviously be aware of liquidity grabs and all of that. All right, so like I said, with gold, we literally have nothing on the left hand side to compare with. So what we want to see, really the best time to trade gold is once gold comes and breaks below this level. All right, once gold comes and breaks below this level, all right, then we have a bit of history to play around with, because as we can see, this is a major zone over here, and our key level there, I believe it will be 2020. All right, as you can see, that's our key level, 2020. The market, this is the high it has been. It's been coming here, rejecting, and eventually it broke out to the upside, came back and tested that level, rejected over there, and continued going up. So there is a possibility of gold continue going up, but from what I see now, looking at 2300, I believe we will start going down just a bit before we continue going up. All right. But then now we'll have to go on smaller time frame to determine that. Okay, so on a weekly we still don't have anything over there. All right, and then let's go on a daily and start seeing. We know that we are in an uptrend, so the bulls are very strong on gold. All right, the bulls are very strong on gold. All right, so we are now on a daily time frame. Still, literally I have nothing to measure gold with on the left. All right, now we're gonna go on a right, so I'm gonna put that there. I'm gonna put this here. All right, you see the market is in within that trend over there, in an uptrend still. All right, and as we all know, we need the market to come and touch the third touch to have an impulse to the upside. All right, so we are on a daily again, we have nothing. Now let's go on a 4 hour. Remember I said the 4 hour literally gives us a lot of information. All right, so on a 4 hour, what do we have? We have an uptrend. We do see that we are in an uptrend. All right, the market broke this channel over there. All right, the market broke this channel to the upside. We see it testing this level over there. It's just not so refined. Okay, I'm going to refine that real quick. All right, we see the market was playing in between this channel over there, and eventually there was a fake out there, and then it broke to the upside. All right. All right. Appreciate you answering the question and shedding more light for better. Thank you so much, sir. Thank you so much, sir. All right. Again, on the left, we have nothing to look to. All right. But now, using price action and understanding price action. All right. We understand that there is a bit after this impulse here. The market needs to come and rebalance price action. All right. The market needs to come and rebalance price action. And there is a bit of liquidity that has been left on this key level here that the market needs to come and take out. All right. And another key level from here is 2-1, I'll say 2-2, 2200. 2200. Let's see what the market did at that key level. Look at that. The market took out this key level over here, which is a very major key level. All right. The market, as you can see here, the market failed to break here. Eventually tried to break, and then it came down. Eventually it broke. So we want to see the market coming here. So there is a possibility from 2300. There is a possibility of the market coming back to 2200. Do you guys see that? So what we can expect on gold, we want to see price action over here. There is a possibility of a sell, which is a high risk trade because we see that the market has been going up and it's been reaching new highs. And if you've been trading for a while, you know that whenever the market gets to new highs, it doesn't respect price action. So it usually just goes up before it starts rebalancing price action again. So there is a possibility of this happening. All right. The market coming back to this level over here, to this zone over here, and then going back up again. Or we could see the market giving us a head and shoulder, or the market could possibly give us a head and shoulder there. All right, coming to this level, doing that. All right, come and grab liquidity over here, and then fall to the downside. All right, so that is a possibility of the market doing that. Or we could easily break this zone, which is, again, because it's a key level, 2300, it's a stronger zone. The market could possibly break this zone and go to 33, maybe 2350. All right, before it comes back down again. So with gold, we want to see what's going to happen. If we break this price, I'd speculate that we go into 2350 before we come down again. All right, or even 2400. But I don't think we'll go that up again before we come and at least collect liquidity and test this level over here. So there is a possibility of the market coming here. And once the market gets here, we will see, the market will let us know whether it's going to continue going up or or it will continue going down. So we need to start looking for price action over here. All right, so now we see where we are. All right, on the 4-hour time frame. On the 4-hour time frame, it tells us exactly what we should be looking for. All right, you see it's a bit more clearer than the higher time frame, but we do understand where we are. So now let's go on a 30 minutes time frame and see what is happening. Oh no, if you're an action trader, if you're a price action trader and you trade candlestick patterns, what is that? Oh no, what did I do now? That is a triangle. All right, the market is in a triangle. So we want to see if the market breaks to the upside. You could easily just take a short buy to this level over there. All right, that is a high. And then let's see what's price over there. It's almost at 2200. All right, so we could see the market, if it breaks to the upside, come in there. If it breaks here to the downside, you could be taking short entries to 2170. All right, you see now that's on a smaller time frame. We have a bit of direction of what the market might be doing. All right, or we could easily manipulate to the upside, come back down again. All right, so that's what might happen. And then, so what will happen? All right, let me tell you. So the market could manipulate to the downside to there, go up, impulse, come and retrace to this zone over here where price currently is, and then continue going up. That is one scenario. Another scenario is the market. Oh no, that's not actually what we were looking at. Oh great. Look at what the market did exactly where we were. Look at what the market did. The market manipulated, played around here for a while. As I was explaining what could possibly happen. All right, so the market broke out of here, went down, came back to test again with this, which is pretty much this scenario but the opposite. Came back to test this and then continued going down. You guys see that? So now let's currently see what is happening in the market. All right, so we literally don't have any direction right now on gold. All right, we don't have anything on a 30 minutes. We don't have anything on the 15 minutes telling us what gold could possibly be doing. All right, so now we wait. All right, now we wait and see this playing out. We want to see one of these scenarios playing out. All right, are you guys with me? All right, so possible sells on gold, very high risk. Possible sells on gold, but very high risk. If we break the 2300 price, we definitely going up. So you just want to look for push to the upside, come back again for a retracement, and then we continue going up with it again. All right, or we could possibly go to 2350 and then now starts falling again. All right. All right, can we look at Dow Jones? Guys, we are out of time, man. We should have ended this session at 1:30. But then again, Dow Jones and gold, usually, let me not even say that before I confuse people. I wanted to say they usually move in the same direction. All right. Where's US30? Seems like that sell is in profit on Euro JPY. Do you guys see that? Oh, nice. So we just had an impulse move to the downside on, put my key levels on Dow Jones. All right, let's go on a monthly. So again, on the monthly, we see we have nothing to play with on the left hand side because we've reached new highs. All right, let's check on a daily. On a daily, interesting, we have a double bottom, a double top over there. We have a double top. All right, If you're a price action trader, you would have taken your sell and taken your sell entries over there. This move to the downside literally came from here. The market created a double top and then broke the neckline, came back and tested that area. Now let's see something very interesting. Let's go on a 4-hour time frame. Let's see what the market did. Look at that. We had our nice double bottom over there. Market took out liquidity over there and then went to the downside, broke here, came back down, came back to test this level over there, right, and then went all the way down, right, and see exactly where it's rejecting right now, 39,100, which is a key level, all right. So if you're taking your entries over here to there, that would have been 39,400. So you would have taken your entries at around 39,400, which is a key level. See, how did I know? Look at that sniper entry exactly at 39,400. Can I plan or what? Do you guys see that? Should have taken your entries right there, and then what did the market do? Boom, go all the way down. Now we want to look at this 3 candlesticks. See, that's a rejection again, market rejection. That is a hammer, rejecting the price over there of the neckline. If we go on a 5-minute time frame, for instance, at our key level, we see price manipulated to the upside, came back down, came back and tested that level. So that's what you wanted to see. You wanted to see that accumulation. We want to see that manipulation at our key zone, because already the higher time frame told us what we are looking for. What happened? We seen that that manipulation, the market grabbing liquidity at our key zone 39,400, coming back down again. We don't take those entries, we wait and come back. The market came back at our key zone to give us a sniper entry, and then we fell all the way down to 39,100, which is about 300 points. That would have been a very good trade. That would have been a very, very good trade. Comprende? You guys see that? So we are now again at a key level. So we want to see what's going to happen over here. All right. I foresee the market going back up again just a bit to rebalance price action and then continue going down, because on a higher time frame we can see that we have that double top over there, and also we have a strong zone over here. We want to see the market breaking it to the downside to see if whether will be continue going short on Dow Jones or will continue going up. So we wanna see the market. I don't see the market playing below 38,500 for a while. I don't see it happening. So this price range is literally where we will be playing at. All right, between 39,900. Why did the market turn at 39,900? Because it's a key level. It's a double zero. Why did the market turn here? See, the market always turns here. Oh, good. It seems like you control the market. You're so funny, Brian. You're so funny. But you guys see that? You guys understand that? All right, guys. I think let's close here for now. We're already 15 minutes. We're already 15 minutes out of time. So guys, I will see you guys, I believe it's next week, if not the other week, on Telegram. Make sure that you do join the Telegram channel. And for those of you that have won premium signals today, do make sure that you text me on Telegram and I'll give you. And everyone that has joined today, thank you guys so much for joining me today. I hope you learned a lot. In the Telegram channel, please give me your review. Give me your review about today's session. Let me know if there are things I can improve on. Let me know there are things that you want to know more. I know someone said they want to know about order blocks, so I'll have a session teaching strictly on order blocks. I know other people said they want to know more about liquidity. I will make a session teaching on that as well. And for now, let's wait for the trade on Euro JPY. If you took the what do you call, if you took the, what is it, the market execution entry, you should be in a bit of profit right now. And then yeah, so let's see how it plays out. Let's see how it plays out. All right, let's see how it plays out. Where is that euro JPY? See, from the time we send out the signal, it's dropping just a bit, almost at our take profit before it even went to our sniper entry. All right, guys. So if you took that trade, well done. Send the profits, send the screenshot in the Telegram group, and then hopefully you guys will have a great weekend. Hopefully you guys will have a great month. Happy new month, by the way. Happy new month. Have a great profitable April, second quarter of the year. I love you guys so much, and I will see you guys next week, I believe. Have a blessed evening and have a blessed weekend. I love you guys so much, and remember, Jesus loves you. Cheers.